Welcome, everyone. I am John Ryan of SportsMemo.com, and you are watching the Financial and Sports Betting Show, powered by the Predictive Playbook cast of shows and also Sports Memo TV and WagerTalk. I'm usually joined by Steve Merril, but we have busy schedules, and I ran over with another previous show, and unfortunately, he's not able to join me today, but I'm hoping that he'll be able to join me tomorrow or Friday to join in with this rather fascinating, intriguing market that we are experiencing right now. And surprisingly, I'm going to switch over to the market here now. And this is Bitcoin, and Bitcoin is trading in relatively small ranges, as you can see here. And what we have here is the purple lines are a mathematical equation that's used to project what a possible range could be in the marketplace. So right now we have a top, it could be as high as 30,562 and the low being at 20,775. And we're at a current price of 20,830. So we're down at the bottom end of the projected range. And if you're a very short-term trader, what you would do here is look to buy possibly at that level. Since it's in a downtrend, that projection is probably going to be lower tomorrow, but not by much. We have the massive bar here, and we've had 3 inside days in a row, and that is a healthy situation. It's reflecting a market that's trying to find its footing. It's not selling off in dramatic fashion and with irrational behavior like we've seen in the past with the S&P 500, for example, or crude oil back in the pandemic on the last day of expiration, trading negative $32 for a contract. And that was the price in the marketplace, and that is what it was. It may not ever happen again, but that was very real. And this area here is the profile. So what you have here, this is based on volume and the number of trades and volume that occur at a certain price. So our high tick volume, as it's called, is right here on this bar, right around 39,000. So longer term, our upside has a big ceiling now at 29,069 specifically, as that horizontal line tells us. So it's going to be chopping around here, I think, mainly between the 27,500 level is where I think you'll see intensifying resistance. And there'll be resistance levels along the way, of course, too. But when it gets to that point, I think that's where you would expect a price failure of any rally coming out of the hole here from 20,745 is where I'm seeing it right now. And that is the projected range for today. That's banging up against the bottom right now. 20,025 is the projected bottom for today. So it doesn't mean you go out and buy. When these lines are going down, you can see that when the price action was closer to the bottom channel here, especially right in here, there's no bounces. There's no bounce up to the upper range. And in fact, this whole time down from this point here, that's basically a good 10 to 12 days where it didn't even remotely come close to the high of the projected high for any given day or the trend. And it's not really projecting the high for a day. It's projecting what the trough, you can see the channel when it highlights, like right there. You rarely get through that channel. And when you get to the extremes, it is an attractive situation, whether it's shorting the contract or buying it. So here, you're definitely more of a buyer if you're a very aggressive speculative trader here. And I wouldn't be surprised to see some of those types of traders, the old floor traders called locals back in the day, where they trade their own account, but it's a very, very large account, and they do their own positioning. And I wouldn't be surprised to see that happen maybe tomorrow or Friday with a little bit of short covering, producing an up day maybe on Friday. Heading into the weekend. Nobody really wants to hold a position in the futures contract of Bitcoin over the course of the weekend, whether it's long or short. The second part of this chart is where it ties into sports betting. And this gold line here that I just highlighted is the sentiment. And this is market sentiment. And much in the same way, I've tweaked the equation for this for the sports betting markets. And then I use the Twitter API. I'm a certified Twitter developer, and I can go in and identify sports teams and the betting community sentiment for them. So, Dub Nation, hashtag Dub Nation is the Golden State Warriors. So I can run data analytics right on the fly, going through 20, oh, actually, it's 1,100 tweets that'll identify stop words associated with negative, positive, and neutral commentary on related to betting in Game 6, for example. Creates a pie chart automatically in a word cloud. And it tells me what the most popular words were, and it tells me the percentage of positive and negative and neutral type of sentiment tweets related to Game 6. You're looking at a chart that does the same thing here in the markets. So sentiment, when it gets to be down here, where it was right there, it was 15.53. So that would be similar to an NFL game coming this fall. And you will see this occasionally. It's pretty rare, but sometimes 80% of bets made and close to 80% of the money is on a team. There might be a good reason for it with injuries and whatnot that made that happen. But if there isn't any reason, and it's just irrational exuberance, as I like to say, where everybody and their brother thinks that Team X of the NFL is just going to throttle that other team that's only getting 20% of the love, you see what happens here. So here's your 20% team right here where my arrow is, and our team does this. So this is a buying opportunity, just like it's a buying opportunity with those teams in the NFL and college football and any sport. We saw it in Game 1 of the NBA Finals, where literally everybody thought it's a no-brainer. Golden State's going to win Game 1, and Boston won. So it doesn't happen all the time, of course, but there are numerous thousands upon thousands of examples every single year where this happens. And we get to the tops up here where my arrow is now, where the mouse is. And see how it gets up here, though? But the price action is not there yet. So you need to wait and be patient when, you just don't sell when the market sentiment, which is one indicator, reaches this level. You got to combine a whole model and as many meaningful indicators and metrics as you possibly can, just like I do in the NFL and college football, because you can see that waiting until you get the right patterns. And here, that right in here, it was a good opportunity because now this is starting to slide down a little bit. Everybody's still wildly bullish on Bitcoin at this point. But then when we got the new high that failed, so here's the all-time high. Well, I don't know if that was the all-time. Yeah, it was. And then you go to 69,000, which is the all-time high for the futures contracts, which is traded in the Chicago Mercantile Exchange. You have an engulfing candle here. An engulfing candle is very powerful pattern, very high predictive power. And what it simply is that you make a new high from the previous day, you make a new low lower than the previous day, and you close lower than the opening. And if you close lower than the previous day's low, like this candle has, that is a red flag. I mean, that is a sign, especially with sentiment at 72.7%. That is a signal to short the contract and look for lower prices to profit. And you can take a look at this chart on your own too. There's several engulfing candles on the way down too that confirm the existing downtrend. So what happens? All of a sudden, people are holding on. Oh, it's still going to go to 200,000. It's going to go to 1 million, whatever. That's what happens at tops. We have a tendency in human nature when the trend is this powerful and the talk and the research is so bullish. Amazon's going to use Bitcoin now for this, and the other thing, and we all start believing that it really is going to happen. But much like the tulip craze in Holland a long time ago, these things come to an abrupt end. But when the top is made, the news media doesn't really report the bearish conditions present in the market until about right here. But following these candlestick patterns, which are very reliable and simple to see with your eyes, you can identify potential tops weeks, if not months, before the news outlets start telling you that the S&P 500 now is in a bear market. It kind of drives me nuts sometimes, but that's the way it is. So simply put, at this part right here is where Steve and I were getting very bearish, and you would establish a position here with a stop at an all-time high, which would be like 70, 71,000. And that's the discipline. There's no guarantee that it's going to do this. It could make another high just like it did from here to here. And then you would get a third wave of bearish divergence, would make the signal even more powerful. But you don't want to, stay in a position and let it work against you to the point that, it's stressing you out. Like you lose sleep or something, or you're not eating right. I mean, that's where it's not worth it. And that's why I always say bet with your head, not over it. Same thing applies with trading, especially with these leveraged contracts that have immense amount of risk. So with that said, you should always consult your financial advisor, because I am not a financial advisor. I have 18 years of Wall Street experience, though. So I would like to think I know a little bit about this to share, and hopefully it's worthwhile. But I am by no means a money manager at this point in my life. But I do like trading them still for my own stuff. So hopefully this is of value. What I think is going to happen here is that we still have to flush out some of the weak longs yet. There's still people hanging on. A lot of people are long from the 10 to 12,000 range and still feel somewhat comfortable, even though it was at 70. That's it's a big paper loss type of thing, but which can cause emotion and like, oh man, I should have sold at 40. Well, try not to think that way. What you want to know now is that, is this story still good? Is it still the story that I bought the original position with? Am I still confident that despite the two downdrafts from 60,000, 65,000 down to 25,000, am I still confident that this is a vehicle that's going to be around for decades, and that someday in the next 18 months, it'll be making new highs? If the answer is yes, then this intraday stuff, you just got to turn it off and put it away. If you are concerned, you can put stops in, or sell half your position or 25% of your position. That way, if it does go down to 12,000 on a downdraft, you can take that money that you sold here and add it to it. Conversely, if it doesn't go down and it starts to rally, that means that the trend is building again and it's bullish, and you're in a much better positive framework for prices to go higher than it is right now. So I do hope that made sense. And we do have sentiment right now down at 8. It's under 20. So again, we have a dog here in the NFL that is not getting any love, and 18% of the population basically is saying that team has no chance of covering the spread against this dominating favorite, so to speak. And that's the analogy here. That's the connection between the markets and sentiment and the sports betting markets. So when we get down in these areas, these troughs, and what I would like to see is for this to kind of go like that. See how it's leveling out. The rate of decline is smaller. It's not a steep, like fall off the cliff type of thing. And we're starting to get a little hook there, if you can see it. The momentum is starting to wane. And it at the same time, guys and gals, it makes it impossible for me to be able to tell you that Bitcoin's going to rally from here, or it's going to go down to 12,000, or it's going to go to 18,000, or whatever. It's really an exercise in futility to try to do that. It's much better, in my 40 years of studying this kind of stuff, look at the picture like you're in an art museum, and let the picture tell you what's going on. And like up here, you have the engulfing candle. That's an engulfing candle. So what does that tell you to do? That tells you to be cautious at the very least, if not consider selling, if not considering getting short in the futures, because that's the only place you can short things in Bitcoin and actually benefit with profits when you buy it back down in here. So that should be the thought process. Never assume anything with price action is going to do this or going to do that. The market's going to do what it's going to do. And I'm going to quick switch over here for a couple minutes to the S&P 500 because we all like to talk about that too. Let me just get over here. So when that refreshes, that's the S&P 500 futures for September. And as you can see, we the profile is telling you we basically had a choppy trading range for a while with the high tick volume is right here at 40, basically 4,400, we'll call it. But now, we've had this pattern. Elliott Wave has 5 patterns to it. And Elliott Wave is something that I've used a lot as one of literally hundreds of indicators that I have. But it's 5 waves. And R.N. Elliott was the guy that sat on the beach one day, and I kid you not, discovered that there was a cycle with how the waves came into the shore. And it's a 5-wave, 3-wave correction, ABC type of thing. I encourage you to Google it or buy a book. It's pretty cool stuff to know and apply. So you have the top. So wave 1, 2, 3, 4, 5. So now this would be an ABC type of consolidation if that's the case. So I do think that, especially with technology and those specific sectors, I think that's way overdone. I mean, NVIDIA is going to be around for a while. Apple's going to be around for a while. Amazon is probably the first time in 20 years that it's caught my attention on my radar as a possible buy. But again, these are only ideas, and you can run with them as you see fit. Consult your financial advisor, the people that you trust most with the markets and their ideas. And the more you network that information out, obviously you're going to be a smarter investor, just like in sports betting with our shows. The more you share the information and collaborate and discuss it, the better you're going to be. You can't do this in a closet with the door locked and try to think that you have the holy grail of sports betting or trading. It's just not. It's not even close to being realistic. So we have an update in place here. Not real impressed with what's going on, but yesterday was kind of almost a doji pattern in the candlesticks, and I'll enlarge this quick. Okay, so you can see that there's a wick up, wick down. Most of the body of the candle is in the middle. Now, if that opening close would have been more identical, then you would have a real doji, and that would be what I call a potential sea change. And a sea change is a reversal. So we're having a bit of a rally going on here today. It's not as substantial enough to hang your hat on it that, okay, the bottom is in. The Fed is going to do what they're going to do shortly. And I honestly, from my experience of being a chief currency strategist, I wish the Fed would just do 100 basis points and get it over with. Go back and read in the early 80s, maybe from 79 to like 82. Paul Volcker was the Federal Reserve Chairman, and he had the guts to do what was necessary in the aftermath of the price freezes and raised interest rates to as high as 22%. We're basically nowhere remotely close to that. And that's one of the psychologies. Think about it. Mortgages were 8% for, if you're 40 years old, much of your life has seen mortgages around 8%. If you're older than that, that percentage goes up even more. That 8% was kind of like the equilibrium. That was the middle, the average. And then when the rates started dropping here during these deflationary trends, you hit 5% and everybody was like, oh, wow, that is incredible. I mean, 5% mortgage, I can't even believe this. This is great. I can get a bigger house, all this good stuff, right? And it was good. But now you go all the way down to, I guess, what was the low? 1 3/4 for a 30-year, which was unbelievably great. But of course, we're not going to go to zero for mortgages. We're not going to go negative. Japan, Germany at one point did in their Treasury market, but realistically, using common sense, you're closer to the bottom at 2% mortgages than you are anything else. But now psychologically, we're going back up through 5%. And now it's like, oh my God, mortgages are 5%. This is awful. Oh, this is terrible. Well, it's not, but that's how human nature thinks. When it's a first time all-time high in Apple, you think, oh man, this is great. But then if it corrects and goes down through that level, you almost a direct opposite feeling. And I talk about that with NBA in-game betting too, and it's the same thing. NBA betting, you want to sell into the strength, buy into the weakness during the scoring, where they're making everything under the sun. You want to sell into the under, basically placing bets on the under. And if they're playing in the mud, you want to start looking at the over. And on the NBA Triple Double show that I just finished with Ronald Kabang, we talked about that, and we have specific strategies in place. And just like trading, in-game betting, you got to have a plan before the market opens, before the tip-off. You can't just go into the game and just willy-nilly. Even with pizza-sized money bets, that is an exercise in futility in itself. You got to have a rigid plan where you know what you're going to do when it happens without hesitation, and you have fun with it. That's the whole key. So I guess enough lecturing today for the university-style show here. But hopefully Steve Merril will be able to join me tomorrow or Friday and help bail me out of these monologues, but I love to do them. It's great having him join us too. So S&P 500 right now needs to consolidate more. We have the trading band, the projected range for today. You can see that we are really, really a lot in terms of value and distance from the upper band. And what needs to happen is, I think what you'll see is we'll chop around here the next week or two. And then this line, this projected high, will catch up to the current price action. The projected low, projected high will converge. And then that is the first piece of evidence we need to be able to start determining, okay, this looks like it is really bottoming now. And there's reason to start, looking at the portfolios that you might have and allocating what I would think into technology, selling out of the oil and gas type of sectors and getting back into the technology, I think would be a great arbitrage. But again, it's just my opinion. Go to people that are experts in this, especially the financial planners that you might have access to, because they are the ones that you really need to go to and make sure that it's right for you and your family and your life. This is just ideas for very high risk speculative type of situations, and that's what it is. So I guess that'll be it for today. I'm going to be joining Ronald Kabang here shortly for a database type show where we show exactly what we do in terms of getting these angles. A lot of people, when we say game one in the NBA Finals, the home team is 17-3. Well, how did you know that? A lot of people say that. How did you know that? They believe you. They believe us, of course. But we're going to show you how we actually go about doing that manual type of work, which we love to do. So I guess until tomorrow or Friday about the same time, we'll be back again with another financial and sports betting show. I hope you like this show. Please subscribe to the channel. Ask any questions in the comments section. I'll be sure to get back to you, or Steve will as well. And I much appreciate you watching the show and taking the time. So until tomorrow or Friday, remember to always, invest with your head, not over it, right? Bet with your head, not over it, same thing. And may all the winning profits be yours. Thanks again.